go to YouTube just to make sure everything is working. Deal with that. Okay, so with that being said, I'm getting ready to go ahead and show myself on the screen. I don't want to wait too long on being able to do that. How's everybody doing? Hope everybody's doing very well. Just want to make sure the YouTube studio is actually showing all of my information. And as we're doing that, then after that, we can go ahead and move forward and be able to get everything else done. So I can see myself on YouTube. Hopefully you didn't hear that echo as I am putting everything else into place and being able to go from there. If you're not familiar with who I am, my name is Travis Witherspoon. I am a Forex trading specialist. I have been trading for the last 5 years. Typically, we end up trading manually here, but I trade manually and automated for my overall business. We end up creating automated systems to be able to help out clients to be able to get started, as long as being able to teach them simple and repeatable styles that they can be able to do for us overall Forex trading. Here, what we do at Trade with Travis is a 30-minute session where we end up talking about current Forex trading pairs. We'll get into metals. We'll get into some. We'll get into metals. We'll get into some overall indices pairs as well, if we do have an opportunity of being able to go from that. We try to do it as fast as possible. We're trying to help people be able to understand how to be able to do it. If you want to be able to learn a little bit more about being able to learn how to Forex trade and being able to go through everything else like that, take the time to be able to hop inside of our 5-day Forex Take Action course, which is going to be on January 25th to January 29th. So you got about 10 days to still be able to log in and be able to get situated with that. We already have a few people that are already locked in and being able to get started with that. Very excited for the people that are new and being able to get started with us within that 5-day session. But definitely have a lot more seats that are still remaining, so you can be able to hop in and get and be able to maximize the overall opportunity of being able to get started. January is the best month to be able to get started with Forex trading. Why? Because the market is very slow. You can start to see what's happening with the overall market and kind of get an understanding. January 20th is going to end up being a transition between what's happening between new presidents. We should see that the market will end up kind of responding after that and kind of giving some ideas. We can see that the US dollar is starting to make a move a little bit and being able to go from there. So this is a great opportunity to be able to get your education. So going into February and March, and then after that, starting really getting to April before we start getting into the summer months, you'll start being able to bask in everything that is happening in Q1 was overall trading. So take the time to be able to do that. It probably would be best if I go ahead and cut through and show that on the page. Once again, that's January 25th to January 29th. If you're interested in being able to do that, please take the time to be able to do that. All you have to do is go to the see more portion of it. You can go to bit.ly/believe in yourself Forex. Also, if you want to, and if you want to be able to hop inside of our private Forex group, where we end up giving a lot of tidbits and notes. It's not necessarily full courses and everything else like that, but if you are interested in being able to do that, consider joining our group called Account Academy. I will send out that overall link to people that actually end up watching this video and are interested in being able to do so. Very excited to be able to talk to people that are interested in being able to do that, because it allows you to be able to get more perks than just the random person just going through and taking a look at most of our videos. So take the time to be able to hop inside of that as we go through and get everything else situated with that. I am finishing up on sharing with everyone as we speak. We are just at a point to where we're getting ready to get started. Just give me one more second, and then after that, we'll go ahead and get into the Forex trading pairs and be able to start talking about those. Once again, excited to be able to have each and every one of y'all on here. So we'll go ahead and move forward when it comes down to that. See. That exclamation. All right, here we go. So let's go ahead and start talking about what's happening with FX3. Remember, we always do our overall taking a look at the charts, get an idea about what's happening first, and then after that, we can go ahead and move forward once we end up having an idea about what's happening with the overall market in the pairs and everything else. As we look at it, today is Friday. So what are we seeing? We're going to end up seeing retail sales from the United States dollar, Michigan consumer sentiment. That's going to end up happening. The GDP actually ended up coming out a little bit earlier for the pound, and that's about it. The market is going to end up being relatively slow today when we're looking at how the market is basically is pushing out at this particular point in time. So please keep that in mind as we take a look at that and starting out on trading. And so with that being said, if we take a look at the big three, remember the big three is the U.S. dollar index. We end up taking a look at oil, and then after that we take a look at gold. The reason why we look at those three is because we want to get an identifier about what's happening with all three pairs. That also lets us know how we're going to end up trading, or what's going to end up being the best portion of being able to trade within the overall smaller pairs like euro, United States dollar, pound, United States dollar, whatever may be the case. So I am interested in being able to see how that's going to end up going with these overall pairs as well. So as I'm looking at it, what we see is the US dollar index is basically inside or very close to the overall sell zone. That also means that if we're looking at this from an overall trading perspective, we may end up seeing that we might have some drop off going into next week. So what I'm going to do is place a counter trend line break up here. We talked about how if this market end up breaking above this overall counter trend line break and then retesting and then starting to push back up, we'll probably see it start to move up toward this little yellow area where we was talking about. It was going to end up being at 11,778, which means that it's about 100 points away from this overall position. I am interested in being able to see how that's going to end up reacting, and if we're going to end up getting more bullish movement from the dollar. But remember, at the beginning of the week, I started talking about, is this market going to be just nothing more than just a retracement instead of being an actual move to the upside? And right now, this is what we're seeing. We've seen that strong move. We see the retracement. Right now, are we going to end up seeing a movement towards that overall yellow area? Are we going to start seeing this to start to happen? I'm at a point to where we know that we look at this from a daily and a weekly perspective. We know that the market is bearish, and the market and if it's going to end up continuing to fall down from this particular point, it's going to go down to 11,550. Going into the next week, I'm going to look at being able to sell more than buy, in which we've been looking at selling more and to buy on the U.S. dollar for the past 5 months at this particular point in time. So I'm still going to consider the U.S. dollar to be bearish. So we're going to look at the dollar from a bearish perspective, and then after that, see what's going to end up happening in that overall pair. So here we go. Let's go ahead and take a look at what's going on with. Let's take a look at what's going on with gold at this particular point in time. I'm sorry. Let's take a look at what's happening with oil at this particular point in time. You take a look at what's happening with oil. We take a look at what's happening with oil. What we end up saying, we said that the market was going to end up starting to retrace. We're looking for the market to be able to retrace before actually getting back in. We want to be able to buy all the way up to $67 a barrel if we can be able to get in. But right now, we felt like it was going to end up being so much of a high price at this particular point in time. So if I'm banking on anything to be able to happen starting next week, going into this overall trading pair, it would be to the overall downside. Reason why I would think that you will probably see a little bit more trading toward the downside than going to the upside at this particular point is solely because that the market is a little bit overextended. Plus, we've broken past a pivot level at the $50 mark, which is basically a very easy number to be able to work out when you're talking about how much it is a barrel. We should see, we have our breakout now. We should see a little bit of a retracement. Once we get that retracement, then after that, I'll be interested in being able to buy long term. Going into $67 a barrel. This may be one of those pairs that I would get into and just stay into for the rest of the next 2 months. If you end up getting a solid price to be able to get into. The reason why I believe that is because, once again, if we look at past history, look at what happened in 2019, we see that the market basically ended up going back up, fell down, and then started to push up. Started to push up about 1,700 points up to $67. Fell back down and then did it over again. Now, will it take time to be able to get up to that level? Yes, it will. But if we go previously based off of overall history, we can see that the market will end up hitting at this point before starting a U-turn and being able to go up there. $67 will end up being the high point, I think, when it comes down to this overall pair based off of history. And that will be the only thing that I really kind of pay attention to being able to go. But right now, I'm not interested in being able to trade it at this particular point in time. I'm interested in being able to wait just a little bit more before making that decision. Let's take a look at gold. We take a look at gold. The market is finally in the buy zone. We talked about how this market was in a downward channel, but we also did talk about that we wanted to be able to buy this long term. And being able to buy this long term, we wanted to be able to get a low price, and then after that, get a counter trend line break to be able to go from there. Ultimately, we wanted to be able to see if we could kind of stay above this overall trend line. But right now, we're still right around that point of control of right around 1850, and being able to see how the market is going to end up reacting. So going into this upcoming week, I am kind of excited to see what's going to end up happening. I'm kind of interested in being able to see how this market is going to end up trading, because if we do get a counter trend line break and we start to have that movement toward the upside, then that means that we have a long-term trade that we can be able to get into and feel pretty comfortable with. Now, that long-term trading position from here all the way up to the D extension is going to end up being right around at 21,070 for the overall position. So if you're interested in being able to get in, I would wait to see if we can be able to get a 2-hour low. We get a 2-hour low price, then after that, I'm very much interested in being able to get in. So for the people that end up getting in right when the market was at 1830, for us being able to buy, congratulations on being able to do that. We see that the market fell down there twice. We talked about how the market was going to fall back down to this level. So you end up taking advantage of the market basically moving down to that position. Congratulations, just hold on your pair and basically go from there. So what I would particularly look for going into Sunday, going into Monday is, are we going to end up getting another chance for this market to be able to fall down to this overall support level? If it falls down to this support level, I will be looking to be able to enter for us being able to buy. And then after that, looking to see if this market is going to break past 1858 all the way up to 1860. And then after that, use that as a platform to be able to start pushing off. I think that going into being able to get your stimulus checks, going into a few different things like that, what's going to eventually happen is kind of like what happened in March, is that the U.S. dollar is going to start to weaken a little bit because of inflation. And if that's going to end up happening, you're going to look at precious metals, you're going to end up looking at Bitcoin, you're going to end up looking at other pairs and things like that to start to gradually rise back again. I think that's eventually what's going to end up happening. So that's what I'm kind of paying attention to. I'm interested in being able to see if I can be able to get a low price. My eyes are on this one all day, going into Sunday, and see if we can be able to get a low price for it being able to buy when it comes down to that. So that's gold, being able to go from there. Speaking of that, random question of the day. As I go through, and I'm getting ready to show myself onto the screen. Did you receive your stimulus check yet? I'm asking for a friend. I know particularly for me, I have not received mine yet. And I mean, it's not like I necessarily need it, but obviously we can be able to use that for some other things to be able to go from there. Typically, I know the last time we ended up looking at it, we ended up getting it on the 15th the last time. I know, at least for my family. But I want to see if that that's going to remain to be true, because I think mine showed up at 6 o'clock on the 15th or whenever it ended up showing up the last time. And right now, I haven't seen anything. But it really doesn't matter at this point in time. Here we go. Take a look at the currency strength meter. Let's see what's happening for the overall movement of today. We can see that the Japanese yen, and we can see that the Swiss franc has been strong. We can also see that the US dollar has been strong. We can also see, looking at that, we're starting to see weakness in the Australian dollar and Japanese yen. We're starting to see a major difference between those. So we're gonna go ahead and take a look at those pairs and see, is there any more room to be able to get in, or do we need to start paying attention to this when it comes down to overall timing a little bit later on? And what I can initially see is this. If we go to the weekly, we can see that the weekly is definitely in the sell zone. We can see that the weekly is also in a push zone for its overall pair. What does that mean? That means that this market has an overall expectation of being able to get up to 80.50. If it keeps on moving in the way that it's doing, for this being able to push up towards the top side. We see that 80.50 has been hit a couple times, and as soon as it's been hit, the market has been sold. So if you're looking at placing in a pending sale just to be able to say, hey, I'm just going to get in and I'm just going to leave out and I'm going to set it and forget it and see what happens, you can place in a pending sale at 80.50 and see if it's going to trigger. If it does trigger, then great. Then you have a sale that you can be able to use to be able to go down to the downside. You can look at being able to go to the downside and being able to go from there. I am interested in being able to see how that's going to end up reacting overall when it comes down to this pair. But right now we are in a push zone. We are in an R3 overall zone. If you are interested in being able to know what that is, hop inside of our overall boot camp, and you can be able to see why we believe that the market basically moves in 5 different positions, or the market is in 5 different positions every time that you look at it. All right, so that's from a weekly perspective. Let's take a look at it from a daily. We're looking at it from a daily perspective. We can see that the market is getting closer to the buy zone, and it has not broken its trend line as of yet. So if we had to split this in half and talk about buy zone and sell zone, we're still considered to be in the buy zone. The market has not split over to this overall zone at this particular point. Let me switch over. It would be nice if I showed it on the screen. And I'm gonna say this over again so I can make sure everybody fully understands what I'm saying. And that's my fault for not switching over. So we go back to the weekly. When we look at this from a weekly perspective, the market is going through its overall Fibonacci's and still being able to move up. There's a distinct D extension that's expected to move up right around that 80-50 area to 80-66 area for the extension. So if I'm paying attention to this and we're looking over to our left, we can see that the market has hit this overall level, and as soon as it ends up hitting right around the 80-50 area, then the market has started to be able to retrace and go back down. We're clearly in the sell zone, and we're basically in a push zone level from the weekly, meaning that if the market is going to end up pushing up, we're still getting to a point to where it's getting very overextended, and we may end up seeing that this market will eventually start to fall. Okay. Now, with that being said, let's take a look at it from a daily perspective. If we look at it from a daily perspective, we can see that the market has hit a D extension previously, which was at 77, right around 77.50 or 77.30. And it is retracing back down to the buy zone. Now, it has not retraced at least to the 382 or anything else like that. It just has basically been hovering around that area. Now, if we're going to see it hover around that area, that means that I'm not necessarily interested in being able to buy it up for those 300 points, because I think that's more dangerous. I think the better play is to be able to look at being able to sell. But if you are gonna get into this, I will get into this with a smaller lot level to be able to get the rest out of this overall move, which is about 300 pips. And I mean, 300 pips is definitely not bad for us being able to go from there, but we want to be able to pay attention to what's going to end up being the move overall. So if I'm looking at this overall position and going in where the D extension is, we're talking about 80.66 for the overall spot. For the overall area where the weekly could be able to move to. We can see that the daily has a little bit more room if it's moving up to the upside. I am interested in being able to place in a pending sale somewhere around this area and seeing if the market is going to end up reacting to it and then falling as it's done over the course of the last few years. So that's what I'm interested in being able to do right now. There's really no position to be able to get into right now at this particular point. It just means that the market has been hitting a D extension, or the market has hit a D extension. There's just nowhere to be able to go from there. All right, now New Zealand dollar, United States dollar, on the other hand, is one other position that we have been talking about. We said that 7,300 was the position to be able to get out of when we end up getting in on this buy. I want to say right before Christmas time ended. The market did hit 7,300. Since then, the market has retraced. That's exactly what we thought was going to end up happening. We talked about now trying to see if we can find a counter trend line break to be able to get in and be able to push this up to the next level, in which we think it's going to end up being right around the 77 area. Let's look at it again. It's been a while since I looked at this. The extension is at 75.50. So once again, going back to the left, let's see where we at when it comes down to this overall pair and see what has happened previously in history. Place this at 75.50. Start taking a look at it towards the left. What do we notice? We see that this market has hit right around that 75.50 area, right around to has hit 75.50. Not many times, but it has been and hovered around this overall area previously before. So we do need to pay attention to how this market is going to end up reacting towards this overall spot going into this next move. Okay, so market is close to the buy zone. What I will look at, if you're looking at an entry, is once market gets into the buy zone, let's see if we can get a counter trend line break on the 2 hour, and after that, possibly be able to look at an entry whatever your entry strategy is. We can see that this market has been rejecting off of this overall counter trend line at this particular point. So that means that if you do get in, you're going to get in on a inner trend line break, be able to go out there an outer trend line move. So I would still kind of wait and see how the market's going to end up reacting. We can see that we have somewhat of a spot right here where the market could fall down to first, and we look at that for its previous history. There goes your There goes your resistance. There goes your support. Market has fell down to that area, somewhere around 71, somewhere around 71.50. Will probably end up being a good spot to start being able to look at getting in the entries if it does happen. Being able to go from there. So New Zealand dollars, United States dollar, we definitely don't have a pair as of yet. And going from there. All right. So, give me that, baby. Give me a second. Okay, I'm back. I'm sorry about that. Let's take a look at some what's happening with the indices. The indices actually end up falling down, and we're gonna take a look at US 30 first, and then after that we'll get into NOS 100. That'll be the only two pairs that we'll look at for as indices that give us a chance to be able to get out of here and be able to take a look at other pairs if there are any opportunities. As we go through and take a look at what's happening off of the daily, we see that this market has been pushing up, and it's definitely in a push zone going up to 32,520. We've seen that the market has been getting very overextended, and you'll probably end up seeing it off the weekly that we're getting very close to the sell zone, in which we are in the sell zone at this particular point. So we're in an area where you're going to end up seeing a lot of diminishing returns. So the question would end up being based off of how the market has retraced and what the market is expected to be able to go. Are we going to end up getting is this going to end up being a very good spot for being able to buy? Or should we just kind of wait to see how the market's going to react? Or should we just change our overall thought process and just say, okay, well, we're only interested in being able to scout the market? And I'm kind of on the latter on this one. If you are interested in being able to buy for this overall position, I would say only look at being able to scout. We know that the weekly is in the sell zone. We know that the market is going to end up eventually starting to fall. We can see that when the market basically got into this area and fell down the first time, that it fell all the way down to 1900 before it started to pick back up. But that was early in March, and that was based off of the coronavirus. If we look at what ended up happening based off of this previously, where the market basically ended up falling for another 3 more weeks, in early August, the market ended up going from 29,000 all the way down to 26,000 very quickly. So what are we looking at? We're seeing that this week has started off in being bearish, or the overall movement has been bearish. The question is, are we going to end up hitting this D extension before we end up taking another dive back down to this overall movement and falling back down to the overall moving average? I am in the light of saying that I think that we're probably going to end up seeing more bearish movement that's going to end up happening over the course of these next few weeks. You can just see that it's coming, right? And we have been slowly having very small momentum towards the upside, which means that people are being way more cautious in their overall buying activity compared to selling. So there's more scalping that is actually happening than more swing trading at this particular point. So the market is in a no trade zone at right now as we speak. If I had to make any type of trade and being able to look at what's happening, we're seeing small consolidation right here. I would bank on this market being able to sell than it would buy. And my EAs have basically been doing the same thing. My EAs have basically been catching up on sales, and it's been doing very well when it comes down to selling for, say, overall performance. But I will show you this, and let's start taking a look at this. We talked about that consolidation. We can see that we have natural support that's been happening right around 30,000 820. Currently, right now, we're at 30,891. The market ended up hitting support, and then after that, ended up bouncing back up. And then after that, we started to see that this market is starting to move back down. What is the odds? If we had to take a look at this and we said what was going to end up happening, what is going to end up being the best case scenario? I think the best case scenario in being able to look at this will say that we're going to look at more selling activity than buying. I know that we're in a push zone. I know that the market is expected to go up to 32,520. I would almost bank that if we're looking at this because the market is in the buy zone at this particular point on the 2 hour. I would almost suspect that if we end up getting any movement, it'll be small movement as a bullish movement today. And we'll probably get back up to this point of control right around 30,064. And then after that, start to see that the market will gradually start to fall down, retrace, and then after that, fall down again. Now, that's just me looking at it and just making and looking at it from an overall identity of, okay, what's happening with the market and what has happened before. Now, ideally, if you can be able to get in where the market is at 3120, if the market can get up to 31,200 again, and you can be able to sell it again, then I will look at being able to sell it at that particular point if we're talking about support and resistance. If it's going to go all the way up to the resistance, then I will look at being able to sell it up at the resistance. I'm not banking on the market being able to push back up. I think that there are more sharks that are looking at being able to sell this market than actually buy. Okay, so that's my thought process when it comes down to US 30, NAS 100, and this will be the last pair of the day. If we take a look at what's happening with NAS 100 on the 2 hour, we can see that the market is definitely in a buy zone for being able to sell. I have been in a sale previously. I'm giving a bank profit on that. Just made $100 off of that overall profit because I can see that the market is starting to cross over and give a little bit of an upside movement. So just made $100 off of that one as we speak. While we're talking right now, my EA actually ended up catching on that trade, and it does not have a trail stop. So I'm not even gonna, because it is Friday, I'm gonna get in and get out and get what I can and be able to move forward. But same deal. What's happening with this overall market? Let's talk about the weekly. What do you see with the weekly? Market is in the sell zone. What are we saying? Market is in the sell zone. There's going to be a eventual fall off in price, right? We know that that's going to end up happening. So what is the odds on favor about the movement that's going to end up happening? I think that we're going to end up seeing sellers activity that's going to end up happening in the near future. Now, with that being said, we can get rid of some of this stuff that we end up showing earlier, because quite frankly, this doesn't matter anymore. Where's the overall D extension? The D don't. let's hold our horses on that. No, let's go back. Let's try time. Okay. The D extension is expected to be at 14,320. Now, eventually, we're going to end up getting up there. I do believe that we're going to end up getting up there, but I don't think that we're going to get up there at this particular point. I think that we're going to see that this market will retrace again. We end up seeing that 12,450 was an area where the market basically fell down to, and was a solid positionable area to be able to get in for its buys going up over the course of the last few weeks. But right now, I don't think that we're in that same position. I think that the market is going to end up falling. If it does fall, if we go back to where the point of control is, right around 11,200 to 11,400 for the overall position. If it does fall, we're going to see about a 700-point drop that could naturally happen over the course of the next few weeks. So take a look at this from a daily perspective. What do we see? Market has been going in this ascending triangle, and we have been talking about this overall position as my son is jumping in the background. We can see that we're slowly moving up, but it's just like a roller coaster. You end up getting up to a point where it ends up hitting a high price, and then after that, once you end up getting into the top level of a roller coaster, then after that, have the huge drop. This is what I'm expecting. I'm expecting that the market will drop at some point in time. But I think it's going to drop from a high price. I think that maybe this might be the high price at 13,130, but we're not for certain yet. Until this market ends up dropping and retracing and giving us somewhat of a drop like that, then that's when I'll be very interested for it being able to sell. Right now, I'm not interested in being able to sell at this particular point right now. One, because the market is not in the sell zone. Two, because I don't feel like we have a high price as of yet. And being able to go from there. But taking a look at that, what do we see from a 2-hour perspective? what's going to happen today? How can we be able to make money today? Well, odds on favorite, I would say that the market will be somewhat bullish today. Now, if we're looking at this is 7 o'clock, and what's been happening is that the market has not been moving in the manner of what happens at 7 o'clock stays to be the same case. We talked about that last week when we talked about that a few days ago when we ended up taking a sale, and then after that the market ended up popping right back up before falling back down. So if I'm looking at being able to get in on this trade, I will look at what happens at 9 o'clock. I give another candlestick about 2 more hours just to be able to see how it's going to end up playing off, then being able to make a decision on what's going to end up happening. Until then, if you want to be able to scout the market, I would say the best scalping opportunity would be buying and being able to see if you can be able to get in. The market has broken a counter trend line break as we speak, and you're looking at being able to get in. Let's talk about an overall play on this one. You're looking at being able to get in. We do have a counter trend line break as of yet. We do have a movement right here, and we're above this overall point of control. You want to take a trade right now, I would take a trade for us buying. If I'm taking a trade for us buying, my stop loss would be below the swing low. Right now, if we're looking at this overall position, we're saying that this is right around 42 points. If I'm going 42 points from this position, this is a couple things that I would be thinking about. Where's the nearest point of control, and where's the nearest area where we're going to end up seeing confluence? I think the nearest area where we end up seeing confluence will end up being about right here. Nearest area of confluence will end up being right about right there, 12,935. So that from here, that's about 25 points. You're trying to scout the market. I think that would be a very safe scout to be able to take. Now, you want to be a little bit more. You want to be a little bit more bold, and you want to be able to trade it up towards certain areas to try to go after some more points. I would say go after 12,967 or 12,970 towards the next position to be able to get out. From there, because it's Friday, I don't think that I would look at being able to go any further than that towards the 2 positions if I'm looking at being able to get in. You can see that once again towards that confluence right there. So if you're interested in being able to make a trade, let's look at risk reward and see if this makes sense. 15 minute, you may end up seeing the market start to fall before actually going back up. So please keep that in mind. But once again, this would end up being your stop loss. Here goes your risk. Put that in red. Reward will end up being right here to right here. Calculate that before we get out of here. We don't want overtime, so we might as well go ahead and finish this up real quick. I just want to make sure everybody can be able to see exactly where I'm coming from. This one. So risk will be 42 pips. Reward, if we're getting in right now at this overall move, will be right around 32 pips. So risk versus reward is kind of off on the first pair. So if we're looking at this from a 15-minute perspective, I wouldn't take that trade if you're just trying to go to that 1 point. You're trying to go to take profit 2, which is 60. Talking about 42, 44 to 42 compared to going out to 60. It's a little bit less than a 1 to 1.2. As a scalping trade, I'll be somewhat okay with being able to trade that, but I will actually wait to see if it can be able to go lower price. Maybe you might be able to get going into the new hour. But we are above this overall point of control. Anything right around the 12,900 area or below, I think will end up being a good, solid trade to be able to get into. All right, so there we go. You like what we end up doing, please make sure that you end up liking the Carter Cow Capital business page. Please make sure that you end up subscribing to Carter Cow Trading on Instagram, and make sure that you end up liking and subscribing to Trade with Travis on YouTube. We do this once again each and every day. Monday through Friday, 7 a.m. to 7:30 to be able to help you out for trading pairs. And if you like what we end up doing, please make sure that you end up sharing this video to somebody, being able to go from there. Like always, plan your trade your plan. Everyone, y'all have a good one. Y'all have a good weekend.